Yeah, I mean, I don't think that they're as restrictive as they think. Quite personally, you kind of see how data is holding up. You see how spending is holding up, despite the fact that we've got kind of these cracks in the employment numbers. Whenever we get them back, at least. Um, and the economy continues to really do so much better than what we've seen around the rest of the world in the developed markets.
So, Marvin, what kind of path do you believe the Fed will take over the next 3, 4 meetings here? The market seems to be pricing in a couple cuts for the remainder of calendar 25.
Yeah, I mean, the lack of data certainly makes things challenging. But the employment picture has worsened since the summer. They started really focusing on that. There's no way with this kind of data void that we have because of the government shutdown that got better in my mind. So they're going to cut in October. They're in pretty broad agreement that they should do at least one more cut. But once we get into December, we're going to have to see if, in fact, we've got kind of that structural supply labor issues and whether or not the inflation
Right.
story, if you will, continues to pick up. We think, and we've got kind of alt data that shows prices are starting to get a little bubbly as we go into
Right.
September, October.
So, Marvin, we're going to have Chris Waller on YouTube. You will see it tomorrow in its entirety, I'm told. We'll see about that from Park Avenue and 59th Street.
Right.
Marvin Loh, I look at what we're going to see from Chairman Powell, or frankly from Chairman Waller, whoever it is. Are they central banker to the world? I mean, do you synthesize the worry and the gloom that's out there as we go up, up, up and away? Are they central banker to the world?
Yeah, I mean, to a certain degree, they still are. The dollar, while we
I
worry
agree.
about its role, but yeah, I mean, they've got a set of liquidity and really economic projections that are, bar none, quite global relative to everybody else.
So, Marvin, as we step back here and think about the global macro strategy here, where do you guys see the best opportunities these days?
Yeah, I mean, there certainly is a lot of momentum out there, and based on everything that we see, people are holding on to those bets, if you will. It's hard to add, if you will, to some of the risk assets. Credit spreads are tight, valuations we know on the equity side are high, but it's also just as hard not to sell. And I think one has to appreciate the balance that we're in from that perspective, especially with a Fed that is still on a lower yield path. That's ultimately supportive. I do think that this is an opportunity to think about where things shake out once we get through this period where we're cutting into general earnings strength, and that's why we continue to be able to put record after record after record in a lot of these valuations. But that is going to come to a conclusion within the next 6 to 12 months, depending on who you wind up talking to. I think it's going to be higher than what people expect. And then it's like, where do you want to be kind of within that type of discussion? And there is yield pressure at the long end still in my mind. You want to make sure that asset allocation is correct. And you ultimately have to respect companies' ability. And you talk about this, Tom, all the time. Companies figure out how to manage
They
these.
adapt.
Yeah, they adapt, and you got to respect that. And certainly
Right.
the companies did a great job when the markets were really concerned about it in April.